Hello and welcome to the home of high probability trading. My name is Tim and I am one of the traders here at the live trade room. What we're looking to do during the session is to trade the US Open fully live and interactive for you. Just before we get in, if you are genuinely interested in learning how to trade the financial markets, then our organization and our team can certainly help you do that. If you're looking to trade these markets from a position of knowledge and understanding for you as a trader to be able to make your own decisions, trading your own capital, so we can certainly help you with that. If you go to a website, thelivetraderoom.com, we have a full range of products and services for those of you that are looking to trade during the day, but also if you're interested in the financial markets and you want to trade on a part-time basis for about 15-20 minutes every evening, we have our Capital Growth Live Trade Room as well, and that allows you to trade daily time frames. So that's the only time requirement on your side, and it's at 9:45. It's at the close of the trading day, where we have that online webinar, and it's a very, very useful way for you to trade financial markets without that much time commitment. Okay, so just go to the website for more information, and you can connect with us for a chat function as well if you need to. So over the next hour or so, what we'll be doing during the session is we'll be looking for high probability trades. Firstly, we'll be using our trade plan from last night. So for those of you that are interested in day trading, we have a trade plan webinar every night at 9 o'clock UK time, and we identify the opportunities for the following trading day. So we'll discuss that trade plan now in just a moment, and we'll fine tune the opportunities that we should narrow in on. So narrowing down which markets we should be focusing on, what direction are we looking to trade those markets, and roughly at what price are we looking to get in. So we'll provide you with all of that information and all our fundamental understanding and the sentiment as well behind these markets. So hopefully you'll have a comprehensive experience while you're with us. So let's get straight into it then. We just need to start with our risk warning, and let's see if we can make some cash for the session. Please see our risk warning currently up on screen. And of course, it's very important that you do take note of the risks involved in trading these financial markets. It is important to be mindful of that risk. It's also important to note that without risk, there's no opportunity for reward. So you trade one with the other. But to sort of forget about effective risk management, or to forget about, I suppose, that part of trading and just focus on profits and how much money you're going to make is not a clever position to take if you're trading markets. And you will probably learn that at some point. So for us, and how we work with traders is to identify the risk and assess the risk properly, and then that determines whether we get in or out of those trades. Okay, so without further ado, the first thing we do really when we hit our trading desks each and every time is to be able to assess market news events. So that is important. Now today is Wednesday, we're now the 14th of April already. These months are ticking by pretty quick. So overnight we've had the RBNZ, so we'll have a look at the New Zealand dollar in just a moment. We got into the New Zealand dollar last night in our Capital Growth Live Trade Room on the daily time frame. They very much kept rates at 0.25, very much in line with expectations, so no major surprise there. There's two events for the afternoon. So we've got Christine Lagarde due to speak at an online event hosted by Reuters. The important part of this event is the fact that there's audience questions, so the markets very well may react to to whatever Christine Lagarde ends up saying. The same situation for the Fed chair, Jerome Powell, who's speaking at the Economic Club of Washington. And again, audience questions are expected. In between those two events, we've got crude oil inventories. So we want to see what that figure is at 3:30 p.m. So anyone trading oil, just be mindful. You might get a lot of volatility around that particular news event. It's a bit of a strange figure. It can be a catalyst for significant moves. Some weeks and other weeks not so much. So it's one of those events to just be mindful of, perhaps, and try to avoid obviously getting into crude oil prior to that event if you can. Get into it afterwards. Okay, so that's really what we have to deal with. A couple of central bankers, very important central bankers, I might add, the ECB and the Fed. It doesn't come any bigger than those. So we'll be mindful of that, and we'll just be conscious of any sort of major market erratic moves, perhaps. Okay, so we got that move after yesterday's session to the upside in the euro dollar above that 19.19 level. So we're now up at the 19.53, and we saw further upside today. We saw further selling kick in. And last night it was really focusing on that dollar weakness trade. But I just want to sort of give you a bit of an overview on the US dollar, because we're running into the very important 50 period moving average on the this is a daily time frame, and we're likely to get a bit of resistance. So that is basically what we're seeing, is that resistance level begin to kick in there at the euro dollar. But how is that playing out across the other markets? Are we seeing a little bit of dollar strength in these markets? It certainly looks it in the majority of these markets. So the euro had been stronger against the dollar, and now that's kind of rolled back over below the 50 period moving average. With the pound, we've had a nice accelerated move to the upside, followed by a pretty strong reversal. So it just means there's a big question mark over the direction in which this market is moving. The dollar yen, we are, and again, we got into this trade below the 108, the 10900 really. So we do expect further downside movement in this, and you can see the 50 period moving average is just up at these levels. What I'm going to do is just put in two more moving averages. I'm going to put in the 200 period. Let's turn that to black. 200 period. So the 200 period is much lower. And finally, the 100 period moving average. So the most important moving averages by far are the daily 200 period, the daily 100 period, and the daily 50 period moving average, because those are used by short-term time frame traders, but also your longer term traders and investors as well. So it's pound for pound probably the most reliable moving averages out there. When you start moving down the time frames and you're using moving average, they're just less reliable. People still use them, and rightly so, and if they give you more confidence in the trading opportunity, then there's absolutely no problem with it whatsoever. But you must know the downside of moving averages, which is often by the time you get the crossover, the price, there's a delay with the information when you're using moving averages. So you need to just take that into a consideration, especially if you're using crossover. A good example is by the time this market crosses over here on the dollar yen, the price is already 500 pips higher. So it comes with its sort of health warning. So let's put in just one more trend just for this the dollar yen trade, because we've seen significant dollar movement to the upside. And let's put in a nice not so much a dark blue, but a nice kind of clear blue. And we want a 100 period moving average in here. It can just be a simple moving average. So we're getting that crossover down at these levels. So what this is likely to tell us is they're both pointing to the upside. So we should actually be looking for the next leg to the upside. But we might get some short-term selling in the interim. So that's why we're looking for prices to just continue lower. And like I said, just on a short-term basis, the 50 period might end up coming up to meet it, maybe around the 108. So there's still, potentially 100 pips further to the downside. And we shall see on that one. The dollar Swiss has already run into that 50 period moving average and has provided a strong level of support. We probably would anticipate something similar in the dollar yen. So keep an eye on that one. So we would expect this market to continue lower. It's not quite doing so. So we have this situation with the euro, the pound, and the Swiss franc, all the dollar's strengthening against those markets. So by no means is the dollar the weakest market out there today. The dollar CAD is showing a bit of sign of strength. So and then we've got the Aussie dollar and the New Zealand dollar, which are quite strong against the US dollar. So we've got a hierarchy of strength and weakness. So if I get up my pen, we'll try to make sense of these currency markets. So if we have our strength v weakness, strength versus weakness, I think it's fairly easy to see that the Aussie and the New Zealand are the strongest markets out there. And just flicking through, there's the CAD is weak, the Swiss franc is weak, so we can probably put the yen in here. And then we put the US dollar somewhere in the middle. So we're getting a small bit of yen weakness. There's really not much in it today between the euro and the pound. So we can probably put the euro in here. Euro to pound. And looking at the Swiss. So the Swiss and the CAD. So the Swiss and the CAD are by far the weakest. So we can put Swiss and the CAD. And you're only doing this analysis off the back of the US dollar. That's the common denominator. This is why we look at these 7 markets, because you can compare and contrast how they're performing against the dollar. So really, we're likely to find probably the best moves in the Aussie Swiss, Aussie CAD, New Zealand CAD, and New Zealand Swiss. So, and what I'll do is if I just take those off, so Aussie Swiss CAD, let's have a little look at those because we've got a bit of time now before the open, so we might as well just have a quick look. So the Aussie Swiss and the Aussie CAD. Here's the Aussie Swiss. Let's put in our template so we can see what's going on. And there's the strength trade in the Aussie. Now we're seeing it against the. So you're looking for markets to close just above that level. So there's your kind of breakout trade to the upside, and you know this is this is probably a decent a decent buying trade. You'll be looking for buying opportunities to get into this to the upside. And the same is very likely true for the Aussie CAD. So I don't know because I haven't seen it, but I would imagine it would be the case just based on our analysis. It's normally the case. Let's load our platform. And you can see how different these positions are, how different these markets are playing out. So a little bit of analysis on here. We can very sort of quickly determine so this is a structural failure to the downside, and now we're just coming back to the 70.89 level. So the overall momentum's to the upside, so we'd expect the Aussie to continue. It's just a question mark just remains over these lows. Is this a kind of a double bottom trade? And we are above the 50 period moving average, which is important. But by far the sort of the easier trade really would be the Aussie CAD. Just take note of these highs as well, because then you can go into these trades. And you see, this has largely been the problem with the Aussie today. Or should I say since last night? This is a 15-minute time frame. So during the Asian session, we saw a really strong explosive move. This is your high probability buy trade just kicking in here at the 95.93. We've seen prices really accelerate higher, and we're making new highs as we speak. So what we don't have is a constructive pullback. We got quite close to one here. It was very shallow and then kicked on to the upside. So price action like that can be quite difficult to navigate, because we want to try to capitalize on the breakout trade, but it was in the early hours of the morning, and we wouldn't have placed a pending order in that particular trade, because we largely focus on our 16 markets. So we do have like a similar opportunity above the 76.64 level. And again, just like the Aussie CAD, this market is just on a tear to the upside. A lot of traders will just jump in. We want to wait for a constructive pullback. It will come at some point. Markets never move in a linear fashion forever, so they'll always correct, and it's on that correction where we're looking to get into the next leg to the upside if the move is genuine, and it certainly looks for now as if this move is genuine. Certainly if it can maintain this kind of level, we'd expect further upside tomorrow. So it's a case of just timing that entry. The overall trend, as you can see, is to the upside. So going back to our matrix, the Aussie and New Zealand are strong. The Aussie and New Zealand versus the dollar are viable trades, and certainly the Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand are all viable trades, but you generally want to try to avoid trading strength versus relative strength. You want to try and trade strength versus the weakness. So I'll just take that off. So that's our sort of analysis on strength and weakness. So we'll absolutely look at these opportunities for some buy trades in the Aussie CAD. In the dollar CAD, should I say? Sorry, the Aussie dollar and the New Zealand dollar, excuse me. I'm just looking at some of these markets as well off screen. So we'll see if there's any movement there. Something that's worth drawing your attention to is what's happened in the bond markets. You might have heard that there's a bit of softening in the bond markets, and that's quite interesting. We had a 10-year and a 30-year, a 10-year and a 30-year bond auction yesterday, and it went relatively well. So there's a bit of softening in bond yields. This is a 10-year note. 10-year Treasury note. So we're down at 1.627. A couple of weeks we were up at 1.75, so that's softened quite nicely, and it really gives more momentum to the upside for the indices markets. So looking at these, we're very close to all-time highs. We'll get into that and have a look at these in just a second. Dow Jones is even making a recovery to the upside. The FTSE is squeezing higher. The DAX is in this sort of strange...
The European Commission confirms they've reached 100 million vaccinations now in the EU. Also says they'll be getting 50 million BioNTech Pfizer vaccines earlier. Will be in the second quarter rather than Q4 as scheduled initially.
Okay, that's good news on the vaccine rollout. And Bitcoin, we're up at the sort of $65,000 level. You'd have to expect it higher from here. There's no reason why prices are up at this high, but there's no reason why it can't go higher either. So this market is just pushing higher, just purely on the basis that those that are in this market are looking to constantly get into this trade on multiple occasions and looking to keep buying as this price is pushing to the upside. Now there'll be carnage if it sells off, but at the moment everyone that has been buying Bitcoin and still has that Bitcoin is sitting pretty up at these highs. So that's likely to continue. So let's put together our trade plan for the session then. So by far the more significant, and just looking at the commodities as well, crude oil is pushing to the upside, so we'll have a look at crude oil, and not quite getting anywhere with gold just yet. So we'll do a little hierarchy of opportunity. So we'll absolutely look at the S&P 500. Up at these highs. We'll have a look at the Nasdaq as well, which is up at these highs, and we very much want to keep an eye on crude oil as well. So we'll put that just down here. So if the equity markets push higher, we're in this risk-on market condition. As a result, we can...
EU Commission also confirms they've started talk with BioNTech and Pfizer for a new COVID vaccine contract for 1.8 billion doses over 2021 to 2023.
Okay. So, and again, all of this positivity regarding the vaccine rollout is all positive for financial markets. There's a lot of stimulus in play. Whether it's fiscal or whether it's monetary policy-based stimulus, there's a lot of cash flowing around, so markets are pushing higher and creating all-time highs. So which markets are we looking at regarding the dollar? Well, if we do our analysis, we've got our the Aussie dollar. And this move to the upside. The New Zealand dollar. And we've just had the RBNZ, so we'd expect there's nothing to hold this back.
Next, we expect to hear from the ECB's Panetta. He's presenting the results of the public consultation on the digital euro to the Econ Committee of the European Parliament. Text is expected from Panetta, though it may not be much on monetary policy. Comments from a French government spokesman says the virus is still circulating actively in France.
Yeah, France is having a bit of a tough time. We'll just tidy this up. So this is our trade plan for the session. These are likely to give us probably the best bang for our buck. with equity markets pushing higher, we've got this risk-on market condition. So really, we'd expect the Aussie higher, the New Zealand higher, and potentially the yen further to the downside. Okay, so let's. We've just got 15 minutes before the cash open, so let's prepare these opportunities. See where the opportunity is. So this is again, it's a bit of a flaw that's been created. So there's multiple levels of support in here, and above the 41.50. We can expect further upside. No reason why not. And we keep sort of amending this as prices push higher. High probability buy trade above 41.50. So that one's quite straightforward. Next up, the Nasdaq. So again, we are just about making new highs on this. So we had been moving sideways for quite some time, and now we're just getting that little extended move to the upside now for the Nasdaq. So we'll come back.
The French government spokesman says the peak of hospitalisation in France has not yet been reached. Says difficult times are still ahead.
So it's actually the 14,011. So it's just above this sideways moving pattern, and then we just get a little breakout trade to the upside above the 14,011. Okay. So buy trade in the S&P, there's a buy trade in the Nasdaq. It's a crude oil trade to the upside as well. So we are in this little range really for the majority of the last month. With prices moving sideways, we're just looking for that opportunity to get into this trade to the upside. We'll it's really just above the higher price, really above the 61.81, so we're a little bit just off that level. And we've got crude oil so it's above the 61.80. So previously we spoke about the 61.18. We're now kind of marginally above that level, and now our entry is just slightly higher. It's the 61.80. So it's a high probability buy trade above the 61.80. And the thing is, if you plan like this, you can pull the trigger. It's a bit easier to pull the trigger to know that the market is performing as per your expectations. So you can look to get into that trade as a result. I might revert back to the daily time frame actually on that one. Okay, let's see where this This is gone. Okay, 12 minutes to the US cash open. So we'll just finish off the analysis, finish off our trade plan, and further upside in the Aussie dollar. So let's go into that and just see where the opportunity lies. Like, we do want kind of a pullback that we can work with. And that would be around the 76.77 level. So anywhere between 76.77 and 76.64 is potentially a strong level of support. So let's take the 76.64. So we are looking for a buy trade above the 76.64, and the reason why we're working with this number. So it's a high probability buy trade above
just in a note here from Morgan Stanley, says their updated simulations do suggest the US can vaccinate the entire eligible population by the middle of the summer. That's even with potential disruptions to the Johnson & Johnson vaccine. Meanwhile, the Iranian foreign minister says he's warning the United States there's not much time to save the nuclear deal.
So there's a high probability pullback. So there's a high probability buy trade around the 76.64. Go ahead and put that in. Meaning we don't want to get involved in the high, but the corrective move, a little pullback to 76.64 would give us the opportunity to get in. So further upside in the New Zealand dollar. You do want a bit of a pullback to the 70.67, I'm afraid. Failing that, or you want a 70.67. $70.67. Okay, so this is the opportunity as we see it. I'm looking for that high probability pullback buy trade around the 70.67. So just pulling back to this level here, and then there's your buy trade. Same situation, but prices would need to just squeeze a little bit lower. Failing that, we just sort of create a bit of a sideways moving pattern, and then we get in on the breakout to the upside. So there's very little volatility in this trade. We'd expect it further to the downside, but let's see if an opportunity exists or not. Dollar yen, it's pulling back to that level. Okay, let's look at this little high here. So with situations like this where you can identify a level of support and resistance, what you're wanting is the structural failure trade to the downside, which we've just had, where this price you'd expect to continue lower from here. So it's okay to get a pullback, but you want to create these lower highs. So if we just take note of this low in here, so if prices roll back over to the downside from this level, we can expect prices to break through that low. Actually, if we get a close below the 108.80, then that would clear out all of this relative indecision. If we are able to close below that 108.80. So high probability sell trade. Trade below. We'll actually go with that lower low, which is the 108.80. So if we get prices breaking that low, then there's your high probability sell trade in the dollar yen. We're not really getting a pullback just yet. We're quite close to the breakout to the upside for the as we approach 1 o'clock, so we'll have the US cash coming in. So we might see some volatility around that period. We've got a buy trade above 41.50. It is an all-time high, so be mindful of that. The Nasdaq is continuing its move. We're now at the 1446 level. We kind of want this market to give us a bit of a pullback if it can. And we've got a potential buy trade, but actually at a slightly higher price here for crude oil. The Aussie dollar, we want the pullback trade to the 76.64. Same situation for the New Zealand dollar, pulling back to the 70.67. Just this high just in here. We want that sell trade below the 108.80 level for the pound yen.
A story just published here in the South China Morning Post, quoting the Chinese Premier, who's told American firms there is room for cooperation despite the frosty diplomatic ties. There's been some conflicting headlines on this already, but reports doing the rounds again. Denmark is to drop the use of the AstraZeneca vaccine from their vaccination programme.
That's an interesting move on the vaccine front. I wonder if other European countries will follow suit. In real terms, the risks are very, very small, but they are risks. So I suppose it probably depends whether there's enough replacement vaccines in place from a public health perspective to get to some form of herd immunity. I guess that's the big question mark. And I suppose time will tell whether the decision made by Denmark is the correct one or not. So on screen, those are our trades. That's what we're looking for the session. The S&P to push above that 4150. That will be an all-time high trade. The Nasdaq, we'd prefer to get in on a bit of a pullback if prices were able to pull back closer to the 14,000 level and then get the next leg to the upside. Crude oil, we're actually looking to get in above this high in here, the 61.81. The only question mark we have on this trade as well is the fact that we have crude oil inventories at 3:30 p.m. UK time. We're also looking for that dollar weakness trade, so we want to try and get in on the dollar weakness, and as a result, we can look at the New Zealand dollar and the Aussie dollar to the upside and the dollar yen to the downside. It just doesn't look like the dollar yen's playing ball with us just yet. But just to keep I suppose a close eye really on the euro dollar, you can see that the euro is beginning to strengthen a little bit against the pound. But the euro dollar, we're currently at that 50 period moving average, so it is a difficult bit of price action for us. The dollar's completely retraced the small bit of pound strength we've seen in the early part of the trading session. So again, it's just continuing to get hit to the downside, the pound. We're still in on the daily time frame. We're still in the pound yen to the downside, so we're grinding lower. As you can see, it's quite a painful move. I think we've just made a very, very marginal new low today. 149.56 versus 149.56. Okay, it's exactly the same price. So you can see why that's a strong level of support and resistance. It's the 4-day low. Gold is there's no liquidity at all in gold, so it's just drifting sideways, and we do like prices to stay above the 61.80. You can see that we've been moving sideways now for, I suppose, over a month. In fact, mid-March to mid-April. So for a month we've been moving sideways. So we want to avoid just getting in slightly below those levels if we can. We want to try and wait and see if the price can actually, break and stay above the 71.80. Then that just gives us a little bit more confidence to perhaps push up to $65, $66, and see prices push higher. So that's the plan for crude oil. So with this amount of sort of volatility, this sort of up and down, well, distinct lack of volatility actually. So really, for the majority of the trading day today, there's only a $4 range, and it's quite a tight range as well. So we're between the 41.48 and the 41.43. So there's only a $5 range in this movement. So nothing to get too excited about just yet. The move that we have seen is in the Nasdaq. So this is at all-time highs now. You know, even the price made in the last 30 minutes are at all-time highs. So we're just wanting a corrective move. Just this market to, we've been drifting sideways. There is your breakout trade to the upside. Eventually we get the move to the upside. We've created an all-time high, and now we're wanting to pull back at the previous levels of support and resistance. So pulling back inside this little zone here to get the next leg to the upside. That's what we'll be looking to see. And at any point in time, we want to be able to read price action and know that there is an appetite for prices to push higher. Yes, we have gone sideways. That all that does is creates a bit of a floor or a ceiling, in this case a ceiling, and then we get the breakout trade, and we want to try and get in on that move to the upside. So with plenty more upside in this trade, so we don't need to be too tight. So you can see we've had a steady push higher. And we called a move back here at the 13,252 level when we saw this really nice little breakout. So apart from 1 or 2 days of kind of sideways moving price action, it's been very, very bullish, very much in keeping with the fundamentals. The major sort of difference in these markets, in the US indices markets, is the Dow Jones. As you can see, the S&P and the Nasdaq are pushing higher. The Dow Jones is rolling back over to the downside. So it's not great. We're seeing a bit of an uptick in the FTSE market, and we've gapped to the upside in the DAX, and prices have actually just rolled further lower. So we go back to our trade plan. So the S&P 500 above the 4150.
In geopolitics, a spokesman for the Kremlin says a Putin-Biden summit in a yet-to-be-chosen European country is contingent upon future US behaviour.
Okay, that's interesting from Putin. So the buy trade is actually above the 14,000 level, so we'd like to get in on a bit of a pullback if we can. With the crude oil market, we're looking for this market above the 61.81. What I might do is just amend this trade. So it's a pullback buy trade around that 14,000 level. So that makes a little bit more sense. The Aussie dollar, we're looking for a high probability pullback buy trade actually around the 76.64. So if prices can just squeeze a little bit lower, we're talking about 20 pips lower, we get into this trade with a little bit more value. Same situation for New Zealand, so they've been grinding higher. We want the pullback. The 70.67 would give us that next opportunity to the upside. And last but not least is the dollar yen trade. So we're looking to sell this market below the 108.80 level, which is just below this level. That's the 108.80. So we just need just a 13-14 pip further move to the downside. So we're close to trades. The S&P is close to that potential breakout trade above the 41.50 level. We're not quite there just yet. So it looks like we're going to have to be a little bit patient in these sessions. Those are our 6 markets. Those are giving us the high probability trades to the upside. You see, the problem is with a market like the New Zealand dollar is where you put your placement, your stop loss. So when you get these grinding markets like this, unless you actually get in on the breakout, and that was in, see, it's quite difficult to get in prior to the 76.41, but okay, we can take this little trade from this level here. So we could look at the 76.50, and unfortunately we got that break during the Asian session, so we had this significant uptick, and you just get constant grinding prices to the upside, and you get very little opportunity to pull back. So when you get in at these highs levels, you know, you're talking about a really sizable sort of 70-80 pip stop loss, and that's why if you wait for a pullback, and if prices pull back to the 76.64, then you're talking about a 30 pip pullback, a 30 pip stop loss. And you know, obviously you need a 60 pip move to the upside to actually be able to close out a positive 2-for-1 risk reward on that trade. So that's when it all begins to stack up quite nicely. And it can struggle if you're talking about a 80 pip stop loss, because you're needing 140, 100 back before getting that next leg to the upside. So we've just got to be a little bit patient really with these markets.
Sometimes the reflection is far more present than the thing being reflected.
So we can probably just get rid of a few of these levels. they're only intraday levels. So if there's anything anyone would like us to have a look at, we can do that. We need to wait for the
news from the European Union. Research analysis firm Airfinity says without the J&J vaccine, the EU will only vaccinate 75% of the bloc by December 8th. That's over 2 months later than expected. The lack of a Johnson & Johnson vaccine would delay the US meeting their 75% coverage to September the 17th. That's out from July 22nd currently.
Now that would be something that could be a bit of a problem.
According to the analysis firm Airfinity.
That's something that could be a bit of a problem for these equity markets, because they're moving higher off the assumption that we'll be getting back to normal sooner rather than later. With all the cash in the system, we're likely to get that uptick in demand, and the performance is likely to be potentially stellar. So if you slow down the recovery, slow down the reopening, then things take that much slower to actually kick in, and it might have an impact on price action up at these highs. So we just need to be a little bit careful of that. We're getting that rollover trade. What we can do is we can get rid of this one, because we're looking for prices to actually pull back to the 76.64, and then if they flush right back to the 76.50 level, you do want a corrective move to get into these trades to the upside. Like we alluded to earlier, all we'd be simply doing is buying a momentum high or a fairly recent high, and then you've got tough decisions to make regarding stop loss placement, and it's very important that you're able to, I suppose, be reasonable with yourself in terms of expectations. So for us, we want to try and secure a positive risk reward on each trade we get into. So we're not getting into a trade for like a let's say if we expose 40 pips in a trade. So we do the proper calculation regarding risk management. So we make sure it's either 1%, 2%, or 3% of our capital, depending on the quality of the trade. Recently, an awful lot of our trades have been 1% trades.
We're just under 10 minutes away from the bottom of the hour and the release of the US Import Price Index for March. Import prices month on month seen rising by spot 9%. Range of estimates between spot 3 and 1 spot 4%. That's against the prior 1 spot 3%. Ex-petroleum seen rising spot 5% on the month against a prior spot 5. And on the year seen rising 6 spot 4% against a prior 3%. The export price index for March seemed right. Okay,
I'll just turn off the squawk there just for a few seconds. AK, good afternoon. Oh, you're new to this channel. Very good. I'm delighted that you've stumbled upon us. Very welcome to join us. We are here every day at 12 noon. If you'd like to join us, you're very welcome to do so. Are you new to trading as well, or have you got a bit of experience? Is there any trades that you're in currently? Do let us know. And if anyone else has any trades you'd like us to look at, we can do it live for you as well, if you'd like to. So just going back to sort of adopting an approach which gives you a positive risk reward. So if we have a 10 grand account and we take a 1% trade, then what we want to do is calculate the trade size so that we're risking $100 or £100 or euros on that trade. So that's 1% of our capital. But what we're looking back is, and let's say that's a 40 pip trade. We're not looking to secure a 20 pip return. So we're not looking to expose £100 to get back 50. That's not that useful to us as traders. What we want to try and do is to risk 100 to get back 200, 300, 400, 500, whatever the case may be, depending on the price action. And that's just adopting a very simple positive risk reward ratio. We do get an awful lot of traders that do come to us, and if we do trade analysis on their P&L, what we find out is that they're very eager and quick to accept a quick win. So it could be risking 40 pips in order to secure 20 or 30 pips. You're still running a negative risk reward. Now, there is a lot of traders out there that can do that. They have to be quite disciplined with their at which they exit those markets. They need to be finely tuned. You can't turn your back and forget, because the markets could drop 100 points or 100 pips, and you're exposing your capital in a very, very poor way. There's also a lot of traders out there and educators that will actually expose. They'll say they'll have a 90% win rate. Well, the reality of that is they're booking in 5 pip winners, and they're exposing 50, 60 or 100 pips when they lose. And you can imagine, let's just, for round numbers, if you're looking to make a 10 pip gain and you have a 90% win rate, all you're really looking to do is you'll book in, out of 10 trades, you'll book in 9 winners. However, that 10th trade is going to be a 100 pip losing trade. So all the 90 pips that you've gained have just been wiped out in one trade. So you just got to be careful about win rates. Win rates don't really mean an awful lot. But once you build in the cost of trading and things like that, they don't really work. They can do for those that are experienced, those that can get out of those losing trades and can take a losing trade with a high degree of discipline. The vast majority of traders are really unable to do that. Okay, AK, so I can see that you're day trading. Okay, great. Always a work in progress. Yeah, absolutely. Every day is a learning day. And what's quite interesting about that is the way we used to trade 3 years ago is very different to the way we trade now. So that's exactly your point. And you have to go with sort of the way that these markets evolve, and you're constantly just tapering and just adapting your approach accordingly. So you're absolutely right. Every day is a learning day. We are on here live every day at 12 noon if you'd like to join us. We set up our trade plan. These are the trades that we're looking at for the remainder of the session. A few of them are kind of pullback opportunities. They're markets that have already moved to the upside. They're now sort of drifting sideways. So we're going to look to try and get in on the pullback in the Aussie dollar. Looking to get into the upside around the 76.64 down at this level if possible. The New Zealand dollar, we're looking for the pullback to the 70.67. So if prices are moving higher, you're looking for previous highs for this market to come back to. Then we can pull the trigger on that trade. The dollar yen, we actually want this market to break below the 108.80. It's currently moving sideways, so that's a breakout sell trade in the dollar yen. The S&P is just rolling over off its high. We like this market above these highs, and we've got close a couple of times to pushing higher, but it now looks like it's just rolling over a little bit. Similar situation with the Nasdaq. We might be able to get into a buy trade around the 14,011 price level. So a little bit more of a pullback in that would be quite useful. and crude oil we're looking to actually get in above the 61.80. So we're in slightly different phases with each of these markets, but that's our trade plan. So we're identifying these 6 markets as high probability trading opportunities. You've got the direction in which we're looking to trade each of these. So 5 bullish trades and 1 bearish trade. And then you've got the prices at which we're looking to get into each of those trades. So this is what we do in our trade plan every evening. We want to make sure that we help our traders with trade selection. You can discount a large number of markets because of the nature of how they're performing on bigger time frames. You really want to prioritize those that are primed and ready to move, and be prepared for the moves in advance. So instead of reacting to what's happening on a screen, you're planning for the trade in advance. And we always suggest trading for us is like reading a book, where you're going through the chapters and you're anticipating what's going to happen next, just by sort of understanding the storyline, and the plot and the characters involved and all of this type of thing. It is like reading a book, and you're just anticipating what's likely to happen on the next page, and then you're putting a bit of a framework around it to be consistent, disciplined, and you're required to be, like now we're required to be patient. It's very easy to get in on the Aussie dollar up at these highs. We don't want to do that. We want to wait for the market to correct, to pull back, as markets do. They always give us opportunities on the pullback. We just need to wait and be patient for the trade. And we always want these markets to perform as per our expectation, not the other way around. So we don't want to go chasing trades and looking at a market, go, oh, there's a buy trade, let's get into that. And you may or may not be successful with that trade, but you don't want to be chasing markets. You want the markets to come to us and perform as we would expect them to. And then decision making is an awful lot easier. You can do so with a high degree of confidence in your decision making. And that's what profitable traders do. They develop trade ideas and they execute their trade plan. And if they take a losing trade, they can say, right, well, the analysis was fine, but price action turned out to be not conducive to that particular trade at that particular time. But if you don't get into the trade, you might get an opportunity to get into it at a much better price or a much lower price, whatever the case may be. So this is the reality of trading these markets, and they do move. More recently, they do move at kind of unusual times. We got a majority of the moves in the dollar pairs overnight during the Asian session. Now they're kind of in this little sleepy sideways moving pattern with very little volatility. So one of the pillars in which we teach traders is patience, and pure and simply that's what's required in this particular market condition. Don't forget, there is on the news front, we've got the Fed Chair Jerome Powell due to speak at 5 p.m. UK time. We've got Christine Lagarde, of course, at 3 p.m. so in an hour and a half's time. Again, this is all UK time. And crude oil inventories is likely to impact the crude oil markets potentially to the upside. We're expecting another negative figure, and that would be positive for crude oil. There's the expectation from OPEC for output to basically match the demand. That's their expectation, and that situation we would expect prices to push higher. So let's see how we get on with those. Unfortunately, we do have to go, guys. We've got other trading sessions with traders. So this is our kind of free to access trading session online through our YouTube channel. So if you can give us a thumbs up or subscribe to our channel. We let you know when we're live. We're live every day, Monday to Thursday at 12 noon. So feel free to join us. We'll put together our trade plan, and you'll see us execute that live on this channel. We've also got a large amount of content that we'll be putting out there over the coming weeks. So subscribe to our channel if you can. Do give us thumbs up, and feel free to join us tomorrow at 12 noon. So on that note, guys, these are the trades we're going to be looking at for the remainder of the session if we get the opportunity, of course. AK, good for you to join us. Feel free to join us again if you can. We'll be back again tomorrow at 12 noon. And for more information about any of the products and services we do offer traders, all at very, very low price, for as little as $15 a month, actually, then you can just go to a website there, thelivetraderoom.com, for more information. And you can speak to any of the team through the chat function as well. Someone will get back to you pretty quickly, and we'll start getting you guys disciplined and consistent, really, with returns over time. So that's the reality of it. So on that note, thank you very much for joining us. Do take care, and we'll see you tomorrow at 12. For everyone here at the Live Trade Room, take care and we'll speak soon. Bye for now.